This material will focus on the potential ability to predict changes in cryptocurrency prices in theory and practice. Crypto Explain, everything you need to know to stay safe. The title of this course published on Udemy is Cybersecurity, How Not to Lose Everything. The material you are currently watching concerns the factors that influence cryptocurrency prices. I have prepared it for you so that you fully understand that there are situations beyond our control that have a huge impact on the value of our investments. In addition to previous materials on external and internal threats caused solely by our inappropriate actions, this video complements all possible scenarios of what can happen to your digital assets. I will discuss both positive and negative aspects here, and my goal is to show you absolutely all possible scenarios of what you might encounter. Analytical data shows that 98% of people lose money on cryptocurrencies, while only 2% earn. This is not by chance, but by awareness of the facts you hear about, among other things, in these materials, and preparing for such eventualities. Knowing about them will make it much easier for you to make informed and sensible decisions, which are necessary if you want to earn in the cryptocurrency market. The knowledge of how not to lose, which I'm trying to convey to you in this course, will enable you to stay in the game and take advantage of potential opportunities that systematically arise before investors, because you will always have capital that allows you to make decisions and take action. The 98% of people I mentioned earlier do not have this opportunity and only watch others make money. You have a chance to belong to the 2% of successful people. So, watch this material particularly carefully and draw appropriate conclusions. The fundamental questions are: can cryptocurrency price changes be predicted? What influences them? Is there a magical way to always be prepared for any possible development? Can one be smarter than the market and outpace it? To answer all these questions, we will first analyze what really affects price changes on the exchanges based on specific examples that have already occurred in the past. Without unnecessary delay, let's start with negative events that, when they occurred, caused significant drops in the markets associated solely with the red color on the exchange. I am convinced that the examples I will show you will change your perspective on declines and increases on the charts, which you surely watch, wondering what will happen next. The first point: important negative news from the world. A perfect example of such a significant negative news event is the Chinese ban on cryptocurrencies in 2021. When the information came out and all media outlets eagerly published it, the markets plunged by several percent in just one day. On the screen, you can see the valuation of the largest cryptocurrencies at that time in terms of capitalization one day after the article was released to the public by Reuters. At the same time, it also appeared on BBC News and all other popular stations. Similar, albeit less intense, declines were observed when India announced that they would ban Bitcoin in their country. There have also been periods when we were threatened with the blocking of cryptocurrencies across the entire United States. And if such a law were ever adopted, we can expect it to have a significant impact on valuations. Discussion about imposing strong restrictions on crypto is ongoing behind the scenes of the European Union's governance. But as of today, we have no certain information on this matter. The only thing that is certain is that this topic will cyclically resurface every few years. And we can be sure that all significant information will definitely be reflected in the color of the bars. Does someone have a hidden agenda in this? Answer this question for yourselves, because I do not know. I only know that those who know beforehand can profit from declines. Unfortunately, that's how it works, and it's entirely normal. The second point: the collapse of a major project. The example of what happens to cryptocurrencies when such a large project as Terra Luna collapses is perfect, and you have probably heard of it. In 2022, the collapse of the UST stablecoin liquidity pool algorithm occurred, causing massive inflation and the price of one Luna to plummet from over $100 to zero. Over 50 billion evaporated from this project alone in just a few days. It was one of the largest and most esteemed projects with tremendous potential, a significant number of developers involved, and a large community. Therefore, this unexpected turn of events dragged the entire rest of the digital coins down. During the ongoing bear market, two-thirds of the market vanished within 8 months. People were simply scared that the crypto market was over when they saw larger and larger declines of 10 to even dozens of percent every day. And the whole situation with Luna only added fuel to the fire, causing panic like never before. To be honest, I don't blame people for feeling afraid because many lost tens of thousands of dollars, not knowing what was happening, why, and most importantly, how to react. I myself was quite surprised because I had quite a bit of capital invested in NFT tokens based on the Terra Luna network. I managed to sell some of them, and I still hold some to this day, which is a very valuable lesson not to be underestimated. Does this situation matter? Yes, it does, because sooner or later, another major player will emerge that will collapse. The question is when it will happen and which project it will concern. Cryptocurrencies are created by people, which means that not everything always goes in the direction it should, so it is highly likely that something similar will happen again someday. In my opinion, there is quite a high risk associated with Tether, which has a huge share in the market because it involves billions of dollars. Yet, no one really knows if it is truly backed by real dollars, and besides, it is created by people with a very average reputation. In my opinion, we will see the day when its liquidity runs out and the history of collapse, as in the case of Luna, will repeat itself. Why do I think so? Because only some projects are created out of passion and a vision of a better future, while the rest are born out of a desire for profits and greed. And in my opinion, Tether is such a project. Personally, I try to avoid it and hold other types of stablecoins, although this is just my personal opinion, which is not supported by any evidence, and you don't have to follow it. The third point, bankruptcy of a major exchange. In 2014, a very large exchange, Mt. Gox, went bankrupt. At that time, there were only a few platforms exchanging bitcoins, and Mt. Gox was one of the largest players, as it handled almost 70% of the world's trading volume. The bankruptcy and closure of the exchange caused significant declines. All individuals who held funds on the exchange and did not manage to withdraw them lost their capital. The process of recovering funds dragged on for years, and ultimately, the affected individuals received no more than the equivalent of their funds on the day of bankruptcy in USD. So, for example, if you had one Bitcoin on the exchange on the day of its closure, after several years being among the lucky ones who received a refund, you could have received $650, as that was the value of your funds on the day of bankruptcy. It's always better than nothing, but unfortunately, lost time and nerves cannot be recovered. In the meantime, smaller services emerged that closed down. There is even a Netflix series on this topic. Then came the time for another fairly significant story, which is the collapse of FTX in 2022, where it simply turned out that its owners misappropriated funds by buying houses in tax havens and spending exchange funds as they pleased without any control, and they felt completely immune due to their political connections and acquaintances. Those responsible for this disaster have not been held legally accountable to this day, despite the fact that many people lost their money and it will most likely take many years, if ever, to recover them. By the way, this is why I often repeat to simply not keep funds on the exchange. Notice how many screenshots of historical declines appeared here, and we are only at the third example. It is very easy to roughly estimate the value of your portfolio if you were unlucky enough to experience all these situations. All you had to do was to be in the market at that time because it affected 100% of all users. So proper preparation, as discussed in this course, is crucial. The fourth point, hacking attack. On the screen, you can see a list of the biggest hacks in history. Ronin over 615 million, Polynetwork 611 million, FTX 600 million, Binance Bridge 586 million, and so on. These amounts are unimaginably large. Looking at specific examples, such as the hacking attack on the Ronin Bridge, we will notice that each such situation had a significant impact on valuations. Due to a security loophole, hackers stole a considerable sum, making this theft the #1 record at the moment. And as a result, the entire project experienced a rather sharp correction in a very short time. Such attacks happen all the time. You can be sure that in a situation where an effective attack hits a project in which you are invested, it will definitely impact your portfolio. Despite the sincere intentions of developers of any application or service, there will always be someone wanting to steal our money, especially since there are so many in cryptocurrencies and they are much more accessible. By the way, programming is not easy. There are hundreds of ways to find vulnerabilities that allow for various degrees of threat, and sometimes, as you can see, really serious ones occur, resulting in the disappearance of large sums. That is why we cannot blindly trust applications, exchanges, or any other service other than our external wallet, which has been properly secured. In some of these cases described on the list, investors recovered their funds from a special reserve pool set aside for such events. But we should not count on such luck because refunds are not the rule and only constitute the goodwill of developers. Therefore, such situations must be considered as potential threats, especially in the case of new projects that may not yet be fully securely programmed. Moving on to point 5, significant drops in the price of Bitcoin. When Bitcoin is slowly rising, everything is fine. Things are similar when the price is stable or slightly decreasing. The problem arises when the decline is rapid and significant. Whether we like it or not, Bitcoin is the king of cryptocurrencies, and when it falls sharply, the negative sentiment spills over to all other projects. I would even say that it is one of the strongest factors influencing declines because I have not encountered a situation where the market ignored the decline in the price of BTC. As you can see, even the largest coins in terms of capitalization can experience a 40% drop or even more in just a week in such a situation. Another such situation may occur after the end of the current bull market, and if you are watching this material, it means you will be able to experience it firsthand. But rest assured, there is plenty of time to prepare the right strategy to exit the market at the right time. The mere fact of watching this material should make you aware that when prices start to fall, the best solution is to exit the market even a bit too early rather than a bit too late. Financially, there is a chance that we will achieve a similar result, but psychologically, exiting earlier will make us feel the satisfaction of winning and the feeling of victory. Of course, it's ideal to exit at the very peak, but surely you already know that it's impossible to perfectly time the top. Nevertheless, I wish you exactly that kind of luck, and may you extract as much as possible from this bull market before a major Bitcoin drop, like the one on the screen, significantly shrinks your portfolio. Remember that this is one of the most influential factors. Point 6. Technical issues. Since crypto is a fairly new and often quite complicated technology, sometimes things stop working. It cannot be denied that this whole digital world requires a very large number of lines of code during programming, and in situations where unwanted interference occurs, we sometimes experience certain technical difficulties. If the problem is significant or lasts too long, investors panic, weaving the most terrifying pessimistic conjectures about why this is happening. Very often, this causes them to panic sell their coins, further fueling panic. An example of this could be the Solana project. At the very beginning of its operation, things often went wrong and crashed, causing the network to freeze and even restart. On the screen, you can see a calendar of technical issues from the beginning of 2022, along with a list of incidents in each month. Each such situation caused price drops. It's quite amusing that something like this lasted so long and occurred so frequently that after a while, investors simply got used to the fact that something always wasn't working and stopped worrying about it. I must say that developers managed to overcome each challenge and systematically solved all the problems they faced, thanks to which the project is still operational to this day. I definitely don't want to discourage you from Solana. At this point, such technical issues are a thing of the past and hardly ever occur anymore. By the way, in my opinion, it's quite impressive that developers managed to handle everything each time and push the project forward. I've uploaded a separate video about Solana on my YouTube channel. Now, let's move on to the positive aspects that lead to the appearance of green favorable candles. Considering the previous videos about the bad things to watch out for, I can say that there are quite a few. Fortunately, for balance, there are also nice opposites that everyone is waiting for, and they also happen. The first point is listing on a major exchange. If a project, especially a small one, appears on a large and well-known exchange, it almost always heralds significant and rapid growth. On the screen, you can see statistics on the price changes for several projects after listing on Binance and their percentage increases after entering the market. All coins except 2 projects experienced a price increase within a short period, and some of them maintained this trend in the longer term. This is because during such listings, more investors have the opportunity to make purchases. Often, with the introduction of new trading pairs, users learn about the existence of a particular cryptocurrency and start looking for additional information. Such a rule does not apply to small exchanges, which have a minimal impact on global turnover, and the influence of listing on the price is much smaller or none at all. From my observations, it appears that listings during bull markets yield significantly better results simply because there are many more people with capital-seeking opportunities. However, during bear markets, it can be seen that there is some correlation, but very often it is neither spectacular nor particularly promising. There is a very interesting article on this topic on LinkedIn. Take a look at it when you have some free time. There are also exceptions to this situation. The comparison also includes projects that did not gain value. In my opinion, it could have happened that some people knew about the listing much earlier, prepared accordingly, and as soon as the new pair appeared, these individuals realized profits, causing a decrease instead of an increase. Unfortunately, that's how it sometimes works. Everyone wants to maximize their gains. The second point is positive news from the world. We talked earlier about the impact of negative information. Now, similarly, positive news is also significant because, of course, it always works both ways. When we hear something exceptionally friendly about cryptocurrencies, it strongly influences investors' positive sentiment. On the screen, you can see information that a large and well-known investor is considering 25 more digital assets after purchasing substantial amounts of Bitcoin. This was a strong signal for growth, especially for tokens listed in the article. For the typical investor, this was information that, since a well-known and reputable company is investing in cryptocurrencies, it must be a good time. A large portion of society reacts to such signals. They wait for social confirmation and look for reasons to act supported by a strong foundation. Similar effects are achieved by news on television, where they constantly repeat that Bitcoin has once again broken new records. People don't pay attention to the fact that it's already very expensive. They focus on the green bars, thinking they will keep appearing indefinitely. The euphoria of this kind can really yield exceptional results. In my opinion, you will also be able to observe this in the coming months. This is a very good example of the fact that emotions have a very big impact on price in the case of the stock exchange. rather than real value. In the case of cryptocurrency exchanges, this statement is even more accurate, as you will surely see. The third point is shilling, which means advertising done by a celebrity or a well-known brand. Nowadays, good marketing is essential regardless of whether it's a classic business or a digital one. Even the best idea won't sell without good advertising, so when a post about a specific cryptocurrency appears on the profile of a known personality on social media, people often just go crazy about it. An interesting example is what John McAfee did on his Twitter profile. He is known for creating a popular antivirus program and taking advantage of the fact that people associate him with security. For quite some time, he posted tweets about specific cryptocurrencies, which quickly gained value at the time of publication. At that time, I myself benefited from being able to earn a bit from it, and with properly set notifications, I managed to enter the market 2 or 3 seconds after the posts appeared, practically guaranteeing a profit of several dozen% in a few minutes. The idea stopped working when the frequency of tweets increased, and people eventually stopped paying attention to them. Additionally, the exchange I was using, which was Bittrex, couldn't handle such a large volume of traffic anymore, and the website kept crashing, making trading impossible. Another perfect example is Elon Musk's tweet about Dogecoin in 2021. On the screen, you can see an article from BBC News reporting how Elon Musk tweeted about Dogecoin on his official profile, attracting the attention of a huge number of investors. The coin itself was a shitcoin, created as a joke, which its creators didn't hide, yet it still managed to achieve almost 17,000% growth. On the screen, you can see the price of Doge on the day the first tweet about it appeared and 6 months later. Of course, it's not that Elon Musk alone had a 100% impact on the price, but he was one of the most significant factors. Similarly, statements from well-known footballers, actors, or politicians work in a very similar way, especially now when everyone has a smartphone, notifications, and social media apps that keep us informed in real time. All such news spreads at lightning speed. Here, psychology works again, not always logic. The fourth example is an airdrop. When a project announces an airdrop for holding its tokens or using its network, people often stop selling them, and new people appear who want to participate in the snapshot, ultimately causing the value of the entire project to increase. A good example is the situation with Bitcoin from a few years ago. To be precise, it was actually a hard fork, but the principle works the same as in the case of an airdrop. In 2017, Bitcoin underwent a split into an additional branch known as Bitcoin Cash. Anyone who held regular Bitcoins in their wallet also received an equal amount of Bitcoin Cash, which could be sold immediately. This resulted from the Bitcoin community splitting into 2 groups, each with a different vision for the future of the largest cryptocurrency. As a result of this event, everyone wanted to have BTC to receive additional Bitcoin Cash coins for free. Eventually, all one had to do was wait. Few people were selling at that time, so the price quickly rose from $1,000 to almost $3,000. In the top right part of the chart, you can see price fluctuations and a drop. This is because some people cashed out profits before the so-called snapshot date, the day when the database of addresses was prepared for the distribution of the new coins. It was also a potential moment when everyone would want to sell because holding Bitcoin longer did not generate additional profits in the form of an airdrop, and usually that's how it works. If an event takes place, for example, on December 20th, many people will want to sell on December 18th and 19th, securing guaranteed profits without waiting until the last moment to see what fate brings. Ultimately, in this case, the price recovered losses, and I mention this so that you are not surprised by price drops just before important events you speculate on. Another excellent example is the story of Celestia. It's a coin that was distributed for free among users of the Cosmos network. All you had to do was stake specific coins within a certain time frame. Usually, after an airdrop distribution, prices drop because everyone sells their allocation, realizing a certain profit without considering what will happen in the future. However, in the case of the TIA cryptocurrency, the community knew from the beginning that holding it in the portfolio and delegating it for staking would guarantee large airdrop allocations in the future. And so, the project, right after its inception, from the initial price of $2.50, has only been increasing in value for 4 months. And at the time of creating this material, the price has already reached almost $20. The first airdrop for Celestia is already behind us. Users who held at least one locked Celestia in staking received over 200 units of the Dimension cryptocurrency, the price of which did not drop below $5 per unit. And the wheel keeps turning because more airdrops are already planned for Dimension, and its price is also holding up very well. Personally, for me, the lack of price drops on tokens from airdrops is a very important signal of an approaching bull market, although this is just my personal opinion. Is investing in this way safe and reasonable? Honestly, I don't know, because being in the market since 2017, I am experiencing for the first time a situation where the prices of such airdrop tokens maintain their value or even increase. Unfortunately, I cannot yet assess how strong this trend is and how long it will last. Here, we should maintain a healthy dose of common sense, despite the current airdrop euphoria. Number 5. Token burning. I'm sure you can guess what happens when a project announces token burning, which is synonymous with reducing their circulation. During a bull market, this is one of the stronger factors encouraging investors to buy. A very good example is Binance Coin, whose token burning history you can see on the screen. At the very beginning of the coin's creation, the total supply was 200 million units, and with each subsequent burn, this amount systematically decreased. Nearly 25% of the total supply was burned in total. Burning involves sending tokens to an address without a private key, which means that such coins can never be recovered, leading to deflation. It was one of several significant factors that influenced the valuation of the entire BNB. In my opinion, it's one of the more significant price boosters. Based on Binance Coin before the first burn, the price was 10 cents per unit. At the peak of the bull market, the value rose to over $600. However, let me reiterate, so you don't misunderstand me, such an increase was not solely due to burning, because several other factors contributed to it, such as the utility of the coin or additional benefits resulting from reducing trading fees for holding a certain amount. Many projects utilize burning with varying degrees of impact on the price. Marketing, community, and tokenomics also influence it. However, it's important to remember that sometimes some projects overuse this possibility for speculative purposes, with minimal or no effect. On the screen, you can see the announcement of token burning by one of the first tokens based on the Starknet network. The burning of 25% of all circulating coins was announced, which is a huge amount at one time. The current price is shown on the screen, with an arrow pointing to the tweet announcing the plans. As you can see, there was no positive impact on the price. Therefore, we must objectively assess all such situations, because burning tokens alone won't turn a weak project into something good. Point number 6. Establishing significant cooperation or business partnership. In early April 2018, the Pornhub platform announced a partnership with the Verge project for payment processing. The news spread in a very characteristic style, indicating that the project was penetrating the market. The price, starting at 3 cents per unit, reached 9 cents in 2 weeks, resulting in a 200% profit solely due to collaboration with one significant partner. If you're wondering whether that's a lot, let me tell you that it means an additional $640 million in capital pumped into this cryptocurrency. Quite a lot, isn't it? Here, I'll insert a small warning. We often come across fake news on the internet that try to convince us of significant facts, both positive and negative, spreading FUD. We should always verify information from additional sources to confirm whether it truly reflects reality. Tweets and articles often appear online claiming, for example, that a particular token is starting a partnership with Apple or Microsoft, only to quickly inflate the price, sell the coin, and make a profit. Don't fall for it. Regarding all these positive pieces of information, we can observe that they have a particularly good impact during periods with positive sentiment, when many new investors are willing to invest their savings, known as a bull market. That is, when the market expects growth. During bear markets, we can also observe these dependencies, but they are usually not as spectacular or satisfactory, at least in my opinion. Of course, there are many more positive and negative factors that influence price changes. It's not that we can list all the significant ones because the market is constantly changing, and something that seems insignificant today may have a significant impact on the exchange tomorrow. For example, we didn't have such a positive sentiment and price-driving force related to airdrop allocation as we've seen since the beginning of 2024. It's worth noting that the vast majority of examples I've listed are random, unplanned situations that arise unexpectedly, and we can't really prepare for them. You might ask now, what about technical analysis? Does it help predict the price? Here, unfortunately, I will disappoint you because no lines, trends, or measurements can account for real-life events that have the greatest impact on what happens on the exchange. If something very bad happens, no trend line can guarantee that the price drop will stop there. No support level will protect you from a hack and a dump of tokens sold by thieves. Therefore, in my opinion, technical analysis should only be used as a suggestion. Many people use it every day, hoping it will change their lives and make them wiser than the rest. Many believe that through such analysis, they will make a lot of money. You have to empathize with these people, imagine what they will do and why, and then use it for your own profit. Notice that every technical analyst demonstrates their skills based on historical data, something that has already happened. So you can always draw some lines or make a measurement because we know the past and can describe it. Few analysts venture to predict the future, and in a situation where they do so inaccurately, such a person always states that the market behaved differently, and sometimes that happens, and it's normal. I'm talking about this so that you don't believe that technical analysis will give you 100% effectiveness, because it's an illusion, and too much trust in this method can make you earn 5 times in a row, but on the 6th you may lose your capital. For clarity, I myself use technical analysis, but only to assess how part of the investors who rely on it will behave. I use it to increase the probability of profit, but I don't assume it will guarantee me 100% effectiveness. I never use it as a foundation for making investment decisions because based on these few years of experience since I've been involved in the world of cryptocurrencies, I can definitively tell you that it's impossible to predict price changes on the exchange. Even if the price follows our speculations or analyses, something can happen at any moment that completely changes the situation and knocks the market off its feet. Just one day, sometimes even 1 hour. We can try to estimate which way the market will go and hedge against any changes in that direction or potential problems that may arise along the way. For example, through diversification or stop-loss orders. The whole magic of making money on the exchange is not about predicting exactly what will happen, but about earning more than we lose and staying in the game all the time. If you master such a skill, time will allow you to accumulate capital that will provide you with a better life. So, if you take the advice contained in this course and learn to act and think in a way that prevents you from losing money, then in reality, most of the work will be done. My advice, don't rush. If making $1 million takes you 5 years, will you be upset? I don't think so. No one will be upset about that. To confirm my thesis that it's impossible to predict the behavior of the market, You can read about very wise and experienced investors who were still surprised. I'm talking about Benjamin Graham, Jesse Livermore, or the Lehman Brothers. Despite their experience, connections, and huge amounts of money, the market surprised each of them and stripped them of everything, leading to bankruptcy. For the market, it doesn't matter what education you have, what experience you have, or what strategy you've chosen, sometimes something just happens that can negate even the best player. I hope that through the advice contained in this material, you'll never join the ranks of the losers. You'll also find more tips on reducing investment risk in the material on diversification. Good luck.